Understanding the difference between a deduction and a credit is one of the most important steps in managing your annual tax bill. A tax credit is a dollar-for-dollar reduction of the actual tax you owe to the government. Unlike a deduction, which only lowers the income you are taxed on, a credit hits your final bill directly. Some credits are refundable, meaning you can get money back even if your tax bill is zero, while others are limited to your liability. While deductions reduce the amount of income subject to tax, credits provide a more direct benefit by lowering the total tax due. In this example, a $2,000 credit turns a $5,000 tax bill into a $3,000 bill. Eligibility rules change frequently, so it is always wise to check the latest IRS publications before filing your return. Tax rules can be complex, so consider consulting a qualified tax professional. Thanks for watching and stay informed.